Hi, welcome to my trades today. Here on this short introduction video, we'll be more focused on trading with the trend at all times. So this means we let the market move to a certain direction and then we look for a suitable entry. This is applicable basically to all types of markets, whether you're trading pairs or use futures, penny stocks, indices, or cryptocurrencies. So, and even if you're a scalper or a swinger, you'll find these methods useful since your goal is just to be on the right side of the markets at any given time on any risk that you decide to take. I've been personally trading for about 10 years now, and I found this to be the most efficient and consistent way to book profits in the markets by just following the trend, just having tools to just follow the trend all the time. So as a home trader, you actually don't want to complicate your trading, right? You want to keep it as simple as possible and consistent as well. So for example, we can take a look at a few of my favorite pairs that I trade week in, week out, the pound, the euros, and some indices as well, Nasdaq, and also I do a bit of oil and gold as well. Anything that is moving, I am in there, and as long as it pays well. So ideally, I look for 50 pips or 100 pips, move my stop loss, or put a trailing stop loss, or just close the trade once it reaches a certain amount of pips. Um, that's all basically. So here I have the GBP pairs open. As you can see, I have quite a few pairs open here. It's because I'm just looking for something that is moving, right? And it's easy for me because I only check the markets hourly or when certain conditions are met, right? So, for example, I have the GBPJPY here just to show you how this really goes. Yes, on Monday, the markets opened nicely. To some traders that have been trading for a while, they know already. We have a triple bottom here, Friday into Monday into Tuesday, and then the market shifts going up on Tuesday, right? So ideally now I have a basic idea of the trend where it is going, which is up. That's my directional bias, right? I also have my market baseline to confirm that. So I'm in the right. So what's next is I look for a perfect entry, which won't be too much low or too much high, so that I can actually be able to book a profit on it. So for example, yesterday was a nice good buy on a GBPJPY here. So as the market started going up, I get a retracement back, and then the market shoots back up. So this would have been a nice, beautiful entry, and this was quite some good pips as well. I love these ones because they really move and they really pay, especially the GBP pairs. So this would have been a nice 90 pip or 100 pip move. But yeah, that is very good actually. I actually did not get this. I was in an oil trade, which we'll get to later on. And then also we have GBPCHF. So this was GBPJPY. GBPCHF, sort of same thing almost happened. For those familiar with the head and shoulders pattern, like I said, as a home trader, you want to keep your stuff simple. Simple, simple, simple. Simple pays. So here, there we go. Market sentiment pulls up. Now we're looking for a suitable entry, right? We want a retracement back and then pull up. So it retraces back here. This was another nice entry. Um, this was a good trade as well. How many pips was this? That's another 100 pips as well, similar to GBPJPY. So usually I enter one trade at a time just to instill discipline, right? This is GBPCHF, and then we have Euro GBP. Like, I love the euro. I love anything that moves. I love anything that is trending, right?